U.S. stock market has taken a major hit following the latest tariffs imposed by President Donald Trump. And one company seems to be at the center of it all is Tesla. With sales plummeting in the U.S., Europe, and China.
Well, figures released this week show Tesla car sales in Europe were down 45%.
Could extend its record losing streak to 9 straight weeks, dating right back to the inauguration. And that, plus protests at dealerships around the country, is even getting the White House's attention.
Tesla, the electric vehicle maker owned by Elon Musk, is warning the U.S. government that American exporters could be harmed.
Tesla's stock continues to slide amid a political backlash against Elon Musk.
But what role do Trump's tariffs play in Tesla's downfall? And how is Elon Musk responding to the crisis? The impact of Trump's tariffs has resulted in Wall Street being in free fall, with all major indices suffering significant losses. The Dow dropped 890 points, over 2%, at one point plunging more than 1,100 points before a minor recovery.
A brutal, ugly day. NASDAQ down, NASDAQ 100 down over 2%. Abigail Doolittle is here with some of the movers. Abigail, walk us through the price action.
Yeah, really brutal selling action, as you're mentioning, Alex. We have the S&P 500 down 1.7%, the NASDAQ down 2.3%. This after the NASDAQ fell more than 4% last week.
The worst decline since September 2022. The market downturn has been fueled by concerns over Trump's aggressive economic policies, particularly his tariffs, which have sparked fears of a trade war. Investors are wary, and the tech sector, led by giants like Apple, Amazon, Microsoft, and Tesla.
The other big story that we are tracking today, the growing uncertainty facing the economy, consumers, and workers. As the Trump administration's actions and reactions sow chaos here in Washington and on Wall Street. The Labor Department reported this morning that the U.S. added 151,000 new jobs last month, the first full month of President Trump's second term. The numbers came in just shy of expectations and largely do not account for recent government layoffs and buyouts.
The hardest hit among all the tech giants is Tesla, which has suffered the most.
Tesla, it turns out, doesn't like tariffs. That company, owned by President Trump's right-hand man, Elon Musk, has sent a letter to the administration warning that it could be affected by retaliatory tariffs from the escalating trade war. Tesla's value has been decimated by the markets. The Dow appears headed for its worst week in 2 years, even though right now, as you can see, it's up nearly 600 points.
The company's stock plunged 15.4% in a single day, wiping out nearly all gains since the November election. Year to date, Tesla's stock is down 45%.
Side Tesla dealerships all over the Bay Area today amid growing anger with President Trump and his senior advisor, Tesla CEO Elon Musk, as KTVU's Jesse Gary reports from Walnut Creek.
In Walnut Creek's downtown shopping area, a vocal example of a new type of retail politics. Upwards of 1,000 demonstrators Saturday targeting this Tesla store.
A shocking reversal from the 91% surge it experienced immediately after Election Day. So what's causing this steep decline? Tesla's European sales are collapsing with a 50% drop in China, its second largest market. U.S. sales have also fallen 16% between December and January, according to Cox Automotive. While electric vehicle sales in Europe rose 34% in January, Tesla's numbers continue to decline. Elon Musk has been one of Trump's most prominent financial backers, supporting his policies publicly.
The new Department of Government Efficiency, headed by a gentleman named Elon Musk, who's here someplace. I don't know where the hell he is.
Tesla is no longer the only major player. European and Chinese automakers are aggressively expanding their market share, eating into Tesla's dominance. Chinese brands in particular are offering competitive alternatives at lower prices, making Tesla's future in international markets uncertain. Musk's increasing political role has had unforeseen consequences.
Musk and Trump's alliance was on full display at the White House last week, with Teslas lined up on the South Lawn like it was a showroom. But that only added to the backlash around the world, fueling more movements like Tesla Takedown.
Instead, Musk has taken on a much more visible and controversial position, fueling concerns that his political involvement could be negatively impacting Tesla's brand. The decline in Tesla's stock signals deeper challenges beyond tariffs. The company's brand reputation, its ability to innovate, and its leadership's decision-making are all under scrutiny. So what's next for Tesla? With Tesla's market value plunging, the road ahead looks uncertain. The company needs a solid strategy to recover from its current slump. They need to regain investor confidence by distancing itself from political controversy. boost sales through aggressive pricing strategies in key markets like China and Europe, innovate beyond just EVs with a renewed focus on energy solutions and AI-driven automation. They also need to navigate the impact of Trump's tariffs, possibly by shifting production strategies to mitigate costs. Analyst Gordon Johnson highlights,
Look, I think the most important thing is the cash burn rate. I also think the margins are going to be important. And I think what people need to look at and what people need to consider, which we think they haven't, is the fact that they did this accounting change. Now they're basically listing more of their leases as direct auto sales. And if you look at the difference between the margins of the leases and the automotive sales, in 2017, lease margins were 36%. Automotive margins 21%. So we think there's going to be a hit on the margin line. We also think the Model 3 ramp costs are going to be significant. So we think there's a disappointment coming on the margin line. So we'd be looking for that.
According to S&P Global Mobility, Tesla loyalty in blue states fell from 72% in late 2023 to 65% in early 2024. Loyalty in red states barely changed from 47.6% to 48.2%. Tesla lost about 1% market share in major states like California. This growing discontent is visible across the country. Protests outside Tesla stores, including incidents of violence, illustrate the increasing hostility. The brand that once thrived on innovation and cutting-edge technology is now a political lightning rod, and that is affecting sales. Even bullish investors are starting to reconsider Tesla's growth trajectory. Gene Munster, managing partner at Deepwater Asset.
Thinking about buying Tesla, thinking about selling Tesla. What do you do now? Is this a bargain? Is it still overpriced?
Andrew, if you're a trader, which I put your timeline like 1-2 months, you probably are not a buyer right here. I'm a believer in where this company is going. I want to start there, but just focus on the fundamentals, because investing in Tesla over the last 7 years.
Investors now assume it's off the table. Musk's focus is also being questioned. As the CEO of Tesla, SpaceX, and Neuralink, as well as the main owner of X and AI company xAI, many worry he's spreading himself too thin. While Musk has redefined leadership norms, even his abilities have limits. Musk's alignment with Donald Trump could pose risks for Tesla. Some speculate Tesla might face trade-related retaliation from China, a major market for the company. According to Isaac Stone Fish, CEO of Strategy Risks, Beijing holds significant leverage over Musk and Tesla. Trade tensions and political ties could create further uncertainty. Additionally, consumer sentiment has shifted accordingly to a Morning Consult survey. 32% of U.S. buyers wouldn't consider a Tesla, which is up from 27% last year. In 2021, only 17% had such a stance, showing a steady decline in Tesla's appeal. Meanwhile, only 16% of buyers are seriously considering Tesla, a number that has remained stagnant over the past 4 years. Tesla's promise of full self-driving remains unfulfilled. While competitors like Waymo and Uber are already rolling out driverless services, Tesla's self-driving tech still requires human oversight. Musk previously claimed that by mid-2023, Tesla vehicles would be fully autonomous and operating as robotaxi. Yet those promises remain unfulfilled. If Tesla fails to deliver true autonomy soon, analysts predict a sharp decline in stock value. Tesla's struggles are rippling across the market. Johnson warns that any further delays in autonomous driving milestones will accelerate Tesla's stock decline. Meanwhile, NVIDIA dropped 5% in early 2024. Palantir, another AI-driven stock, plunged 10%. Bitcoin fell to $78,000, its lowest level since November. The VYX hit its highest level of the year.
China is in the midst of a trade war with the U.S. Last month, Trump imposed tariffs on all Chinese imports. And since then, Beijing has retaliated with countermeasures that place duties on coal, oil, gas, and a variety of American goods.
A proposed 250% tariff on Canadian dairy products and lumber looms over the market. The economic impact is already visible. Layoffs are rising. Hiring is slowing. Consumer confidence is eroding. Inflation is creeping back up. As investors watch closely, the stock market remains highly volatile, with Tesla at the center of the storm. Tesla's current predicament is a mix of competitive pressures, political entanglements, and unfulfilled promises. While some analysts see the dip as a buying opportunity, others believe this could be the beginning of a long-term downtrend. The biggest question remains, can Tesla bounce back, or is this the moment when the electric vehicle giant finally loses its edge? Let us know what you think in the comments. Don't forget to like, subscribe, and turn on notifications for more in-depth videos on the ever-changing global market.